scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning. For individuals and institutions, it's a buy and hold asset because it is in such early stages. And really, think about that. Institutions probably have trillions commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted.
Cathie Wood begins her commentary by identifying three primary drivers behind Bitcoin's long-term value proposition and why it's starting to command attention among younger investors and major institutions alike.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The key drivers, there are three. The first is it is becoming a substitute for gold in terms of a store of value. Younger people prefer Bitcoin than gold, and I think they do believe that it is basically the same thing. Both of their prices are determined by scarcity value, and in the case of Bitcoin, right now we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin supply growth dropped below the long-term supply growth of gold, which is 1%. With the latest halving last year, the supply growth now is roughly 0.9%, and that will continue to go down with time, which is unlike gold. If the gold price keeps going up, that supply growth will pick up in its pace. That cannot happen with Bitcoin. The second reason is institutional investment. Now, Bitcoin it represents three things. It's a technology, so the blockchain underlying Bitcoin, which is a layer that the internet missed out on in the early 90s because developers had no idea financial services would take place on the internet. So now that is now being put in place. It is a store of value, as I just described, the reason why most young people are attracted to it. And it is a new asset class. It does not behave like other asset classes. Sometimes it behaves like the NASDAQ, sometimes it doesn't. Sometimes during the regional bank crisis in the US in early 23, it boomed because everybody understood no counterparty risk here like the banks had back then. So it doesn't behave like any other asset. And that means that institutions and asset allocators have a duty to assess whether it deserves a role in the portfolios or their asset allocation. And if they say no, they better have some very good reasons. So the $100 billion that I mentioned, institutions have to either take up those newly minted Bitcoin, and that's going to happen over years and years, or they'll have to pay up to get holders to sell it. So again, scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning. If you look at Bitcoin over time, the volatility was incredible in the early days, 200, 300%. It has been coming down consistently, 40, 50% now. And if you believe in the scarcity value of Bitcoin, just like gold has had ups and downs, you're going to be willing to put up with the volatility. But it's the sort of asset where you put it in your portfolios and then just leave it there. I mean, there's going to be trading around it, and that's great for the exchanges. We're involved with Coinbase. That's great for exchanges. But for individuals and institutions, it's a buy and hold asset because it is in such early stages. And really think about that. Institutions probably have trillions commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted. Personally, I have bought Bitcoin outright. Many of our clients wouldn't let us put it in the portfolios, so others are playing it through Coinbase. Robinhood is developing a crypto strategy as well. SoFi is developing a crypto strategy. eToro here in Europe just went public, and we added it to our portfolios. It has a crypto strategy. So many are forced to go indirectly just because their platforms. I'm thinking about advisors now. I realize you're DTC, so your clients can buy it outright. The last thing that I'd like to add is there is a way to kind of straddle the two, and that, of course, is ETFs. So spot Bitcoin ETFs were approved. The SEC approved them last year. ARKB was one of them. That's ours. And so that is sort of a way to leg into pure play Bitcoin exposure instead of dealing with a wallet provider.
At the 2021 peak, ARK's portfolios were trading at a 275% premium to the S&P 500 using enterprise value to adjusted EBITDA, adjusted for SBC and R&D. Today, they're trading at only a 10 to 15% premium, well below ARK's long-term average of 90%. In Cathie's view, the valuation reset is complete. Her team believes that with strong productivity growth, lower inflation, and favorable monetary conditions, disruptive innovation is poised to lead the next bull market.
Our strategy is volatile, more volatile than the market. And that's because these are long-duration strategies. So they do get hit harder during turmoil. But the ironic thing is when consumers and businesses are afraid or concerned, worried about the future, they're more willing to change the way they're doing things. So better, cheaper, faster, more productive, more efficient, more creative products and services. That's what we do. So what you usually see towards the end of a correction or a bear market is our stocks tend to start outperforming before the broader market does. And that has happened in this time as well. We went through tariff turmoil. We went down more than the market, and now we're up more than the market. And the question now is, will this be sustained? If we're right that we're moving from a rolling recession to a strong recovery with surprisingly low inflation because it's going to be productivity driven, I think we're in for very good days for innovation, all kinds of equities, of course. But, our stocks over the last 4 years have faced 3 major headwinds that are going to turn into tailwinds now. Would you like me to go through them?
Yeah, sure.
Yes, please.
Sure. So the 3 headwinds have been, first, the interest rate shock in 22. Now, just because interest rates go up or stay up, it usually doesn't bother our strategies. If you look at 2017 and 18, the last time Trump was in office, interest rates went up. And we way outperformed the market in both 17, which was an up market, and 18, which was a down market, and our flagship strategy was up. It was the shock of the interest rate moves. We're not going through another one of those. That headwind is done. The second headwind I mentioned earlier, which was the concentration towards a very few stocks, and therefore what I describe as an unhealthy, not broad-based bull market. That we think is changing. We started to see it upon the election of President Trump. Then we had tariff turmoil and we had the backtracking. And now we're seeing it again. So, and then the third headwind is a valuation headwind. At the peak in 2021, our portfolios sold at a 275% premium to the S&P when measured using enterprise value to adjusted EBITDA, adjusted for SBC and R&D. And we've worked with S&P to get that metric. So 275% in February of 21. Today, we're somewhere in the 10 to 15% range relative to the S&P 500. On average, through ARK's existence since 2014, we have sold at a 90% premium. So we are well below average, well below pre-COVID. So that headwind is gone as well.
As we've heard from Cathie Wood, the case for Bitcoin is stronger than ever. It's not just a speculative asset, it's a technological breakthrough, a monetary revolution, and a long-term store of value unlike anything we've seen before. With institutional capital waiting on the sidelines, the approval of spot ETFs, and supply continuing to shrink, Bitcoin is positioning itself as a core component of the future financial system. Please like and subscribe.